and this is all about transforming. What the company is right now at a very exciting juncture, where where we are looking at two companies merged into one. So it's a transformation which is happening within the company in many folds. One is that it's a merged company, the capacity is increasing, and not only that, but we are also working very hard on sustainability front. Our objective is very clear, that we need to be a leaders in the cement portfolio. We need to make sure that the company is on a growth path. So Ashraf, if you can sort of run the slides for me, and if you can turn it over. So it's our vision and mission, which is followed by our journey towards becoming a largest player. So if you look at our years of journey, I think this is the exciting times where the company in 2022 from a 6 million is taking a leap into 8.4 million and 10.5 million in 2024. So it was from a company which was 3 million has literally doubled its capacity, and this happens obviously because of the merger which you did with Askari. And then moving on, there are two expansions which are happening within the company. One is coming inshallah online this year, and to be exact November, and the other one which is at DG Khan is happening inshallah in 2024. So if you look at Pakistan's roadmap, it's a company which is the only one in the country which has got now 4 sites, and our footprint is really spread all over and within the country. So next slide.
Next slide, thank you.
So it's
the
back. So the key is making sure that there is a sustainable raw material supplies and control on cost. The control on cost is very simple. It is the cost of fuel and power. So we as a company are not only focusing on the cost of fuel, but on power. So if you look at the column which says captive power plants, you will see a big chunk of solar, while we also have a waste heat recovery plants. So almost 45% of energy needs are being met through captive in-house green energy. This is where sustainability is all about. So all our sites, I'm happy to say, now have solar plants on their sites along with the waste heat recovery units. And we on our Zampore site, we are in the process of putting the solar power plant, which you see that 11 megawatt there, which is inshallah 6 months down the road will be fully commissioned. So next slide. So this is our footprint. Next slide, Aisha, please. So this is our reach within Pakistan. So right now we are focused in the northern part. Zampore plant is very closely located near the hydro projects. So it's not only a quality of cement, but location as well, which gives edge to our Zampore facility in feeding all the hydro projects which are happening in the country. So that's a big plus for us. The DG Khan project, which is there as a future, which is inshallah 2024, will improve our reach not only to the southern Punjab, but also to Sindh and Balochistan. So as you're looking at the map, So our 4 sites are literally covering every nook and cranny of Pakistan. Next slide, please. The one at the back, Aisha. Happy to introduce Fauji tile bond. This is part of our diversification. We currently have all the type of cements which are available in our portfolio, and tile bond is another feature which is now coming up. And you'll find this product one of the best for use in the tile bonds. So I do encourage all of you to go ahead and use this product. Next slide. I think one of the key strengths is around the financials of the company, having a very strong balance sheet, a very robust credit rating. In terms of our cash generation, we are very, very strongly placed, and we have a very strong liquidity. Next. It's a listed company, so it has got a very strong system of governance. We are fully compliant on all the regulatory requirements. So that we have independent directors, which head the HR committee and the audit committee. So all transparency and a very strong governance around the committees. And the board is fully authorized. The direction comes from the board. The policy decision comes from the board. So we also have a woman director on our board, which sort of ticks the box around the compliance. Our directors, which are being flashed, all having very diversified and rich experience. Our chairman is a very well-known name in the country. So I don't think he needs any introductions here. We have people with very strong financial background. We have people with very strong HR background. So all our directors have a very strong skill set residing themselves, which help the management to develop key decision making through the board. Next, please. This is the shareholding structure, which is being flashed. 66% with the Fauji Foundation Group. Next. We recently won, if you see that certificate of merit on an annual book, which is done by ICAP, which obviously confirms that the company is fully compliant to all the regulatory requirements. We also won a certificate on environment, which is from the EPA Punjab. The company is fully ISO certified. Next, please. I was talking about sustainability in the start. And this sort of confirms about our commitment to the environment in which we operate. We strongly believe in protecting the environment in which our sites are operating. We have a very focused approach to reduce our carbon footprint. So how do you do that? We are shifting from fossil fuels to alternative fuels in terms of our raw material. We are, as I was telling you, our solar and waste heat recovery are a journey towards our sustainability, where we are reducing the carbon footprint and moving from fossil energy to green energy. Next, please. We are fully committed to a greener Pakistan. So each of our sites have our large orchards. We have every year we do a campaign on tree plantation. And interestingly, we have also now entered into honeybee farming. So we have orchards and plants all around which are helping us in this honeybee farming. So we as a company, I repeat and emphasize, are committed to green Pakistan. Next slide, please. Fauji Cement is very strongly focused on the CSR. We care about the community around us, whether it is education, it is health, and very proud that one of our sites have a women vocational training institute where the girls and the women of nearby villages come and we teach them how to make garments, how to make handicrafts, which are then sold and the earnings go back to the individuals who have made it. So this is not only helping them in teach a skill, but also earn a livelihood for their families. Next, please. So if you look at the industry, I think 2021 saw a quantum leap because it was post-COVID era. And there were a lot of projects which sort of opened up. 2022 saw a dip really because of the global recessions, high cost of construction material, which resulted from very high prices of energy, i.e. coal and power, which obviously the company had to pass on. So that sort of restrained the buying power of the people. But moving forward, we see that there is definitely a revival of the construction sector. So it's quite positive as we speak right now when we are looking at 2023 now. Next, please. So now I hand over to Mr. Omer, who is our CFO, to take you through the financial overview.
Thank you. So the key elements of the key events that have happened in financial year 22, these are the ones listed. The biggest one was the merger of Askri Cement into Fauji Cement. That marks a major milestone in the life of Fauji Cement. We kept on enhancing our clean energy initiatives by adding on the capacities. The two ongoing expansions, we'll be discussing those. And obviously, to improve our business processes, we've got online with SAP. Next, Aisha. So I've just highlighted some of the outcomes of the merger just to share with you. This takes Fauji Cement currently without the expansion impact coming online from an 8th position to 4th overall in the industry. It increases our capacity from 3.6 to 6 million. Askri Cement is a well-established brand in the market that it operates. So there will be no cannibalization in terms of sales. So it has a separate established brand in the markets that it operates. That gives Fauji Cement an additional advantage. In terms of production flexibility, we now have 3 sites as compared to 1 earlier. So more spread across the country in the north, as well as having the flexibility to alternate production between the units. The financial strength we've discussed. It takes our market share in the north from 8% to 14%, giving us a major share in the market. The geographical outreach increases. And lastly, it is an earning asset. Askri Cement had a profit before tax of 3.3 billion to contribute to the overall profitability of Fauji Cement. So these are just some of the key outcomes of the merger. Financial year 22 marks, as I said, a major milestone in Fauji Cement's life. In the journey of profitability is concerned, this happens to be the biggest year, the largest profit that we've made so far since Fauji Cement has come into operation. The numbers show for themselves the increase in the revenue and the profitability and the EBITDA along with the margins are reflected. We have a very healthy debt to equity ratio. Despite the expansions coming online, we will still continue to have a pretty comfortable overall debt component. Yes, Aisha. Cost of production is a focus for us, is a continuous focus for us to keep on bringing initiatives, taking some out of the box decisions so that we are able to be the most cost competitive in the industry. We've made few strides this year. We've come down as compared to the top 5 or 6 players. We've come down to almost 4th. The journey is ongoing for us to be in the bottom quartile. The major component of our cost, as you can see from last year, has increased by 37%. The cost of production, that is what forced the cement, the prices also to go up. We've tried to compensate for the high international coal prices by using maximum Afghan and local coal. If you can see, the ratio this year for the complete company was 30% imported and 70% was contributed from the Afghan and local coal. We started to reset our plants in a way that they can use a higher quantum of local coal just to mitigate the impact of imported coal. And the power additions will continue to happen. Similarly, the power mix, we are trying to, as far as possible, to increase our pie in the overall generation capacity and to use minimum from the national grid. Next slide. Just a brief about the expansions. The CEO did mention, Alhamdulillah, our Zampore Expansion, the Brownfield Expansion, which had a budgeted cost of 27 billion, split between a debt equity of 17 and 10 billion. The debt component had the subsidized financing of TURF and LTFF. It's inshallah going to be completed within the budgeted cost and the time. In November 22, we hope to kick off the project and accomplish the COD. Next slide. This is our Greenfield expansion, a big challenge for us. It's a complete brand new site, gives us phenomenal advantage as far as our outreach is concerned. It places us right at the center of Pakistan, giving us accessibility to those markets that we weren't present earlier. The project cost of this is 32 billion. It was split between a debt of 20 and an equity, which is going to be internally generated, of 12 billion. And we had a portion of LTFF and TURF for this as well. It's inshallah expected to be commissioned in the 3rd quarter of 2024. So just a brief talk about the future outlook, how we see it, how the industry is going forward. The fundamentals of the cement industry, as far as demand is concerned, we feel that are pretty strong and continue to remain so. Some of the key elements that help us deciding in that factor is Pakistan still has a very low per capita cement consumption as compared to the regional players. With more urbanization, there is more need for housing. With increase in population, housing and infrastructure is needed. And with the dams now slowly coming up, the bigger dams and along with the run-off river dams, we hope that not only for energy but for the agriculture of our country, these projects do mature in the future. So that gives us certain comfort as far as the cement demand going forward is concerned. On the short-term basis, yes, the geopolitical tensions that happened with the war in Ukraine pushed up the fuel prices, and whatever happened within our country of the devaluation and the increase in the power prices, that is a short-term negative as far as we see demand goes, because obviously all construction materials had their prices increased, which sort of those who are already in the construction phase, they sort of would complete, but the new ones at times take a wait and see approach to just to delay the projects on those lines. So we hope that this will be a short-term phenomenon and we will come out of this, inshallah. The high inflation, obviously, and the increased interest rates discourages mortgage financing. State Bank had given targets to the banks to increase the mortgage financing, but now with expensive becoming a little expensive, consumers would be a little reluctant to do that, and it also increases the borrowing cost for businesses as well. This year is showing Afghanistan, because we are located in the north, so our export market is Afghanistan only. So we mainly focus towards that. We are a big player in the Afghanistan market. So this year is showing signs of recovery as compared to the last year. They had some political and along with that some banking channel problems, as a result of which the remittances were coming in difficult, but they've sort of made headways in that. So we hope this year, as far as the numbers for the 3-4 months show, will be a better year for the Afghanistan exports as compared to last year. Next. So as far as our companies is concerned, where do we stand today, and what are our key focus for the short term going forward? As the MD explained, all those sustainability initiatives, the CSR initiatives that we have undertaken, we are making a comprehensive ESG policy to bring all of that in line with and have a comprehensive policy addressing all of those. This is a key component for us. The two expansions that are ongoing, Zampore is almost near completion, and DG Khan is to be completed. That's our focus going forward for the next year. And as I said, to become the lowest cost producer, this is our aim. This is what we have an ambition to be, and we are working towards those lines. We are, questioning ourselves. A concept of zero-based budgeting is there. That why do we have to incur any cost? So we are working on those lines as well to see our overheads and other costs and how we can, what is the difference between us and the lowest ones, and we keep working on that. The capacity power generation will be added. We are adding a 11 megawatt solar power plant at the Zampore site, and that would continue to see more opportunities on those. And the business process improvement with the go live of SAP is happening this month. So inshallah, this comes online and makes us, very competitive in terms of the information processing and the decision making that we need to do. So this was all from our side. We'll now would be happy to take questions.
Thank you so much, Mr. Omer Saab and Mr. Ashraf Saab. So the thing is that we have opened the floor for the Q&A session, and we have received a lot of questions. So I will start reading the questions one by one. So the first one is from Mr. Asim Khatri, and he's asking that as Askari Cement was previously unlisted, please share the CAPEX financing sources for its expansion. Apart from that, please share the timeline, CAPEX and financing for DG Khan expansion.
So I'll answer one by one. So when we went through the expansion slides, I shared with you the Zampore expansion which was happening on the Askari Cement's balance sheet. The total cost of the project is 27 billion, and it was financed through a 17 billion debt and 10 billion equity that is being put in by Fauji Foundation. If you see the sponsors of the company, if you see our financials for 30th June, you will see that a subordinate debt of 7.3 billion is outstanding. So that is where the equity for that project is going to come. And as far as DG Khan is concerned, as I said, the total budgeted cost is 32 billion. 20 billion of that has been locked in the form of debt, and 12 billion is internal cash generation. The cash savings that we've had for the last 2 years and what we expect before the project completes, we will be well above this required internal cash generation target.
Okay, he's asking one more question, that what is the current GP margin and what is the outlook going forward?
GP margin keeps varying. We close the year with 28%. So when the first quarter results are out, they will inshallah know what the first quarter GP margins were. We can't share what was forecasted. And so we hope to be in a similar zone as we close the last year. Maybe a little bit dip because of if the cost increase further, the fuel cost, but in the 20s region.
Okay, thank you. The next question is from Mr. Ali Jamani from MCB Arif Habib. He's asking that what operation efficiencies can we expect from the recent merger with Askari Cement, and how much BIPS improvement we can see in the margins?
So basically, if the guys who are following Askari Cement Fauji Cement for the last many years would have seen that a couple of years ago we did that shared services arrangement. We made that public. So the purpose of that was to reduce administrative cost. So we did that shared services so that we have a common management. So some of those were achieved through that phase. You will see the reduction in the administrative cost coming in with the combined accounts. Other than that, we'll now be having combined buying of the raw material and the fuels and that. So that will bring in other efficiencies. Some of the things that they were missing we have a lot of spares and common equipment at the 3 sites. So we have worked on those as well. So we won't require to keep inventory at several different plant sites, and that will help us to reduce our inventory holding. So these are some of the main things that will come in, and some of the efficiency obviously Fauji Cement will build into Askari's operations.
Okay, perfect. He's also asking that given the government fiscal constraints, will the company be able to withdraw 10 billion rupees under turf and LTFF for its greenfield?
So we've already started utilizing the turf. As far as that is concerned, there is no restriction on the turf part. The LTFF, yes, we have an approved project under the State Bank financing scheme for LTFF. We have utilized about 600 million of that for the Greenfield project, and we are waiting for the balance. As soon as the shipments come, yes, today State Bank hasn't allocated new lines after 30th June to the banks. So we see how that goes. We would take up that with the State Bank and try and materialize that as well.
So just for clarification purposes, so the LC has not been open for the Greenfield project yet, right?
No, it has already been open.
Okay.
It was open last
so
year.
how much? Okay, so how much capex has been done so far on this project, the Greenfield one?
So the Greenfield has so far had about 3.5 billion capex that has been incurred.
Okay, thank you. So there's a question around the coal inventory. What is the average cost of coal inventory that the company has, and how many months inventory does the company currently has? So yeah, this question is from Mustafa.
Yeah, sure. So our current cost is about 44,000 rupees a ton, and we have about 3 months of inventory in hand.
Okay, thank you. Mr. Ali Jumani is again asking that what is the cost in dollar per ton for the brownfield project and greenfield project, and changes in the 60 billion budget for expansions given recent devaluation of PKR?
So as far as the brownfield expansion was concerned, it's already near completion, and as said during the presentation, it's being done within the budgeted cost. So so we won't have any problems there. As far as the greenfield is concerned, yes, we've currently valued it at about 220 rupees to a dollar. So that has about 2 to 2.5 billion cost overrun as compared to the budget. So seeing where the currency settles, we do expect a little bit overrun in that, but hopefully we will be able to manage that from internal cash generation.
Okay, thank you. Hassan from Maple Leaf Capital is asking that what is the percentage use of local and Afghan coal in kiln in fuel mix? So I think this was shared in the presentation as well.
Yeah, the total Afghan and local combined is 70%.
Okay. And the other question from Mr. Hassan is that what is the current retention rate on local sales?
It's about 960 rupees. And the MRP is 960.
Okay, perfect. And the next question is from Mr. Fahad Hussain. He's from Adan Securities Limited. He's asking how much is Afghanistan coal and Pakistan coal, which you've already answered. So I'll move on to the next question. Mr. Usman Arif is asking that Fauji Cement's total debt has increased to 33 billion rupees at the end of June. Can you please share that how much portion is new debt taken for expansion?
So out of the total debt, about 6 billion is what was carried forward as a result. Some came from Askari and some Fauji already have, but mostly as a result of the merger. So about 6.5 billion of the total debt relates to the prior year, and the rest is all new. Okay.
And he's also asking that Askari Cement has taken 7.4 billion loan from parent company that allows Fauji Foundation to convert this loan into ordinary shares of the company at any time during the term of the agreement. Can you share that? What would be the price if the conversion happens?
I think it depends between the company and the sponsor, so can't make any speculation on that. So they have an option. When they want to exercise that option, taking into view the company's financials, they would exercise that option. So let's see how we move in the forward.
Okay. Moving on to the next question, it's from Mr. Shamsuddin Shah from Alfala Investments. He's asking, what is the current cost of coal inventory? And he's also asking that, what is the current retention price for the company? For example, diesel price increased by almost 100 rupees per liter. How much bag price increase was required to pass on the impact?
So I've answered the coal part. It's about 43 to 44,000 average cost that we are holding inventory has. And as far as the price increase, he wants to relate that if there is a 100 rupees diesel price increase, how much does the bag price increase? So it increased between 30 to 35 rupees, I would say.
Okay. So the next question is from Mr. Mehroz Khan. He's asking that other than waste heat recovery and solar plant, what is the other source of power generation, specifically of Wah and Nizampur plant of Askari cement?
So Askari, Wah and Nizampur both do not have any additional generators. So they are aligned only on the waste heat and along with the solar power plants that we're putting up there. We've already commissioned the one at Wah of 8 megawatt, and now the one at Nizampur of 11 is going on.
Balance come from the grid.
And the balance is made up from the grid.
Okay, perfect. Thank you. The next question is from Mr. Etizaz Faruqi from Multiline Securities. He's asking, can you please share the current prices of Afghan and local coal?
The local coal current prices are close to 42,000, and Afghan is about 53 to 55,000.
And he's also asking that can you please shed some light on the local coal procurement? What would be the annual output of local coal, reserves of mine, and its calorific value?
So we have very varying types of local coal available in Pakistan. The main issue with the local coal is the percentage of sulfur in it. That is what restricts companies from going to a very high percentage as compared to maybe Afghan coal is usable up to even 100%. Its quality is that good, but local coal restricts it depending on the composition of the plant site and the sulfur content. So it varies between, I would say, between 40% to 60%. That is how it would vary from plant to plant.
Okay, thank you. Mr. Etizaz is also asking, what is the current sea freight?
Current sea freight, we aren't importing imported coal for the past 8 to 10 months. I think sea freight from South Africa is about $20.
Okay, and the next question is from Mr. Sunny Kumar from Topline Securities. He's asking, where do you see local cement demand growth for fiscal year 23 and fiscal year 24?
So currently, I think July and August were not true depictors of what demand going forward could be because of the heavy rains and then followed by the flooding. But if September and the 10 to 15 days that have passed for October is any benchmark with which we can, sort of forecast of what the demand would be. So we expect 10 to 15% decline this year in the domestic dispatches. And we hope, although an unknown X factor could be the damage as a result of the floods that has happened to the infrastructure. So if that becomes a driver in the next second half of the year, if some funds are allocated by the government and the relief that they get, so if they are able to spend on the infrastructure, then that could be an unknown commodity at this point in time. That could change this percentage. But as far as we are standing today, it's about 10 to 15% in 23, and we hope in 24 it will pick up depending on how the economy goes. Basically, if they are focused, the government is more focused towards growth, then obviously it will be in a positive, I think.
Okay, thank you. The next question is from Mr. Mukeet Naeem. He's asking, how do you see the price disruption scenario when the expansions comes online?
It's a market-driven price mechanism. So we see how the demand goes and the price, depending on how the cost input increases, the price is driven by the cost push.
Yeah, yes, so I think I've pretty much covered all the questions, but we're going to wait for another 5-10 minutes. And I would request the participants to please write their questions in the chat box so that I can ask these questions from the management directly. So, yeah, so I think my colleague, Mr. Yusuf Rahman, wants to ask a few questions. He's just trying to connect.
Sure.
Okay, so since Yusuf is having some trouble in connecting, I'll ask another question from Mr. Hassan Raza. He's asking, what is the outlook on coal prices?
On the coal prices?
Yes.
So as far as international coal prices are concerned, because Afghani coal prices to an extent do follow a pattern, although the current increase has left a wide hole between what the imported coal costs and what the local Afghani and other prices are. So it all depends. I think the imported coal prices depend on the geopolitical situation of what happens in the war in Ukraine, because a lot of the European countries have resorted towards opening up their coal-fired plants and are buying more coal to meet up their energy needs. So with winter coming up, we don't see much respite. Although I've seen in the past month or so, the imported coal prices from an FOB of 320 almost have come down to 240, 45. So that is a major decline if that is a trend to show. But winters generally see imported coal prices going up. So we see at similar levels at what we are buying today, as far if there is no supply problems.
Okay. So generally, what are the key risks that the company is looking at for the business over the next 12 months?
So obviously, our biggest drive force for energy that we're focusing today is the expansions. So we've done the Zampore. We've now got to put cement into the market. That is a challenge for us. And then the other thing remains the focus on DG Khan, because it's almost 16 months away still. So as quickly within time and as much as less of a cost overrun that we can complete it, that is the biggest challenge. As far as the cement demand goes, as I said, we do see a decline this year, but we hope that it will rebound during 2024. So there aren't much risk there. We expect as the interest rates haven't been increased further by the central bank. So we expect that maybe if the financial position, if the fiscal space with the government improves as a result of the funding, bilateral funding that is supposed to come in, if that does come in and some space is created for growth, so maybe the interest rates start coming down. So that could be a plus. So maybe we've seen the peak of that. So that then doesn't remain a risk. It's something that is known. The biggest thing I would say is we would like the construction material prices, all construction material prices actually to come down. How much of that will come down as a result of the input costs that have gone up? So that is something that worries us absolutely, that we would like the construction material prices to come down so that people, are more inclined towards restarting their construction.
But just to add what CFO is saying is that, both Fauji and Askari have an edge over others in terms of quality and the fact that both are qualified for all the hydro projects. which are happening as we speak. So that gives a big edge to the company, A, because of quality, and B, because of the location, which I mentioned earlier on. So we foresee our Zampore expansion offtake largely towards the hydro projects, which the good thing is that despite of all the issues, the dams are still progressing. There is a dip, obviously, because of the damage to the infrastructure due to the floods. However, as we speak, they've started to rebuild all that area. So we are pretty confident that our Zampore expansion is going to be off-taken because of all these hydro projects which are happening.
Okay, thank you for highlighting this in detail. I'll move on to the next question. My colleague wanted to know that what is the sulfur content of Afghan and Pakistani coal, and could it potentially damage the machinery?
The sulfur content of Afghani coal is less than 1%, so that doesn't damage machinery. It just needs to be the proper calorific value. If that is okay, then there's no problem. The sulfur in the local coal goes up as high as 5%, and in some places even more than that. But cement plants do, make arrangements to go up to 3 to 5%. That doesn't have a negative effect in times of the machinery, and especially the refractory bricks that we use in the kiln where the fuel is burned. So as far as 3 to 5% range is concerned, cement plants are generally comfortable, and that is the range they keep to use local coal. They generally do not go beyond this range.
Thank you for clarifying that. I'll move on to the next question. Mr. Fahad Hussain from Adam Securities is asking, will the company pass on the impact of lower coal prices?
If I say that the MRP had touched about 1,000 rupees, 1,010 even a couple of months ago. So today it's 960. The reason that it's come down is because of the advantage of local coal.
Okay, and the next question is from Mr. Suhail. He's asking regarding the convertible loan from parent company. Is there any intention to convert at a later date? And is the conversion price been left to negotiations, or certain parameters have been set?
So it's open-ended between the parent company and the company to decide on what price it will be converted. As I said, there is no fixed date. Obviously, the sponsors are also interested to see that the company does financially well and is financially comfortable in doing and taking a decision whenever the time arises. So I think at an appropriate time, if it has to happen, it will happen. But so far, it's an open-ended thing. That is why they've put it in the form of a subordinate debt, so that there isn't a requirement to immediately increase capital, because we already have a big capital base. So that is currently not the focus. But as I said, hopefully in time, if that decision does happen, we will happily share with our shareholders.
Okay, thank you so much. The next question is from Mr. Mukeet Naim. He's asking, can you please put some light on the gross margins of Askari Cements only for fiscal year 22?
So the margin, I think we ended with about 25-26% for Askari. But I would just, when we announced the annual results, I saw some of our friends from the research houses trying to calculate the profit of Fauji Cement for FY22 standalone basis, and I could understand the purpose of that was that they want to give a comparative, because so that the comparative doesn't go out of bound as it currently shows. So one of the houses reported that Fauji Cement had earned a profit of 4.4 billion. I was actually stunned to see how that figure came about. We had actually reported 7.1 billion. So I would just request our friends not to, calculate, because this is one company. So try and focus on Fauji Cement's results as a whole. And hopefully, just to share with you, because this merger was effective from 1st July 2021. So when you see our first quarterly accounts, you will see that because the merger was effected, so the first quarterly accounts for September 21 will have the impact of Askari as well. So for all the quarters going forward, you won't have that difficulty of drawing a comparison.
Okay. Thank you. The next question is that recently announced Maple Cement's results show that its margin expanded on a quarter-on-quarter basis. Should we expect a similar trend for Fauji Cement in the first quarter?
I think you will have to wait a little for that.
Yeah, so let's wait for that. The next question is from Mr. Shamsuddin Shah from Alphala Investments. He's asking, besides waste heat recovery and solar power plants, how is the company meeting its power requirement and what is the current grid cost per unit? And he's also asking, what is the export price to Afghanistan?
So the export price to Afghanistan is about $45 a ton. We meet all our requirement that is left over from the captive through the national grid. And after the first August increase by NEPRA, the current average tariff is close to 31 rupees.
Okay. So the next question is that is Mozambique coal prices are now in consideration to replace Afghan coal?
I think they are not really there yet. It does have a low quality aspect as well that needs to be considered. But anything above, I would say $175 is still expensive as compared to if we keep getting Afghani coal.
Okay, so I see a lot of questions on the coal, so I'll just club them all and ask you that given the different sources of coal, Afghan, local and imported, what is the minimum heating value that is required for the kiln process?
There isn't a sort of a minimum benchmark required, but it needs to be coal and can't be powder actually. So as far as the minimum specs of that, the grains is concerned for the coal, if they are met, we use between 5,000 to even 6,500. The higher the calorific value, the better the coal. So we use anywhere in the range between 5,000 to 6,500.
Okay, perfect. So there's one more question related to the loan. When will be the loan from parent of 7 billion rupees payable? So yeah.
This loan is part of the financing structure, as I explained. So obviously the lenders have a say in it. It can't be repaid without their prior approval. So you hopefully expect to see this on the financials for some time to come.
Okay. Thank you for clarification. The next question is, I think you've answered that already, that what are the alternatives available for Fauji Cement for power generation and what is the cost per unit for each alternative as of today? That means he's asking for coal, FO or any other source such as grid.
So the cost on furnace oil as well as RLNG we have in our Jang Bahadur plant, which was earlier Fauji Cement, we have an option to run a generator on both these sources. But currently even the latest tariff that they've announced, the price for both these commodities is still higher than 31%. So still it's about 34 rupees.
So I see a question related to the efficiency of Askari and Fauji Cement plant. And the question is that what is the energy requirement per ton for the coal for both of the units and the new units that are expected in fiscal year 23 and fiscal year 24, if you could highlight that as well.
So the coal requirement ranges between 130 kgs per ton and between 130 to 140, depending on the calorific value of the coal. But that is the range. Askari is just to mention, absolutely true that some of our friends and colleagues don't know about Askari Cement. It wasn't a listed company. So the VA plant of Askari Cement is a European plant, FLS technology, the same as Fauji Cement's line 1. And the two lines at Zampore are, I would say, a Chinese hybrid. So they upgraded about 3 to 4 years ago and brought in some changed some of the mills to European plants. So they are also pretty efficient. So it's not that there is a big range between the three plant sites as far as efficiency is concerned.
Okay, great. We just have 8 more minutes before we conclude the meeting. So I would like to generally ask you that what is your view on prices in the near term, and how do you see that the demand is going to be in fiscal year 23?
I think demand, we spoke earlier also that because of the peak in the hydro projects, and then apart from the devastation we had because of floods, there has to be a rehab and a rebuild. And you know the extent is still unknown, but it's massive, you know, in terms of bridges and infrastructure. So we do foresee that as soon as the weather clears and people sort of gather themselves, there will be a demand.
Okay, perfect. Thank you so much. I've run out of the questions now. I think you've answered all of the questions that were there in the chat box. And I would like to thank once again the management of Fauji Cement for taking out time for us and letting us host you. With this, I would like Mr. Omer Saab to give us the closing remarks, and so that we can end the session. Thank you.
I think first I would like to thank all the participants for taking out time and taking interest. Some very interesting questions, you know. So which tells me that I'm happy to see that people are looking at the Fauji Cement very deeply and closely, and came up with some very pertinent and you know, very smart questions, I would say. So I take it very positively. And in my closing, I will just try to sort of reiterate the fact that Fauji Cement is now transforming. We are transforming into a bigger company. We are transforming into a company which will have a very strong HR resource due to the policies, due to the HR improvements which we are happening. So being second largest or third in North and third largest player in the country is by no means a small task. And I think we are proud to say that we are creating history in the sense that we are doing 2 expansions at the same time. Nobody has done it. We are going to have, inshallah, 4 sites. So we will spread all over the country. Nobody has got that advantage. We, alhamdulillah, are proud to produce the best quality cement, which gives us an edge over all our competitors. We are very focused on our sustainability initiatives. I've already told some, and the journey continues. And we are committed to our CSR. And I would just like to highlight, although at DG Khan, we have just taken a start in terms of construction, but before we moved there, we started to help people which were devastated by the floods. We have done a lot in terms of immediate relief, food, tents, medicines, and now we are in the process of doing a rehab for the community. We are building their houses, we are providing them water, and now we are in the process of establishing infrastructure for education and health. And so that demonstrates our commitment to work for the community in which we operate. So thank you very much once again.
It was my pleasure, Omer Saab and Sir Qamar. So thank you everybody for joining us. You can disconnect now. Allah Hafiz.
Thank you, Ashraf.
Thank you, Ashraf.
Thank you.